Welcome back.
What's going on? What's going on? It's Christian Olson with Berkshire Hathaway and the team Frank Oliver and Company with Heather Kelley and Ryan Kurrle. Say what's up.
Hey guys.
Where's the energy, Ryan?
It's a video podcast. I can wave, right?
Yeah, you can wave.
Christian came with some Mike Frank energy though, and he was expecting the same.
You have to. I got big shoes to
I'll work
fill.
my way up to that.
Big clogs.
How are you, Ryan?
I'm good, man. No complaints on this end.
Yeah. Love to hear that. So today's topic is going to be lending, and we got our primary lender here, Ryan Kurrle with First Home Mortgage. Tell us a little bit about what you do.
So as Christian said, I'm a lender with First Home Mortgage. So as Christian and Heather, they're going to help you find a home. I'm going to help you with the finances. So I'm going to help you get the money to actually pay for that house.
Now, what are some things that, I guess, tell us a little bit about the lending process. Where do you start? What are some things that people may need throughout this process to submit to you? And what does the turnaround time look like for that?
Yeah, good question. So first step is working on getting pre-approved. So this process is to see how much you could get approved for when you actually apply for the loan. So when you have a physical house to purchase. The pre-approval, depending on how long it takes you to collect different documents, we can have that done within a couple of days. Really, it's as easy as jumping on a phone call. We'll talk for about 15 minutes to go through your goals in the home buying process, what you're looking for in a house, what you're looking for in a mortgage, where you want your monthly payment to be, your out-of-pocket costs to be, kind of those basic things. And then also talking through where you are financially. It's
kind of like a buyer consultation, you know?
Yeah.
Yeah, exactly. Probably similar to a lot of the questions that you guys ask, but just more focused on the actual lending side rather than the home side. From there, you fill out an application, quick 5-10 minute application, send in some documents, different things like pay stubs, W-2s, bank statements.
Mm-hmm.
Then we review everything, come up with a couple estimates, run through them with you, make sure you're comfortable with the out-of-pocket, with the monthly, and then we communicate back to you guys and say, hey, Rick's pre-approved for $300,000. Go start showing them some homes, right?
Yeah. Okay. Now, probably the $1 million question everyone's asking themselves right now is what the hell's going on in the market? Let's hear from a lender's point of view. What is going on here? What are some things that maybe they should look out for, if there's anything at all? And then what are we doing to combat that and put buyers in the correct position?
Yeah. So, there's a lot of media outlets out there that are putting out all this.
Call them out. I'm kidding.
And it's all going to be negative right now, right? Because interest rates are going up, and news outlets today tend to focus on negative headlines, right? Because it gets the clicks. What I would say is don't focus on that too much and focus on what we can actually control, right? So when we talk about your monthly payment, let's focus on where you want your monthly payment to be. And if that lines up on where we can get you into a home today, then great, right? Who cares what the interest rate is if you're comfortable still making that monthly payment, right?
Yeah.
There's different options out there that can help you out with getting a lower interest rate to start out before maybe you step up into that higher interest rate down the road. You have options to refinance in the future, so you might not even be in this mortgage for the long term. So yes, we are at a interesting point in the market right now because everybody's used to seeing those interest rates that were in the threes, right? And now we're up near 7%. But again, that's something that we can't control, right? We can't control where interest rates are. We can't control prices of homes, but what we can control is where you want to be monthly and where you want to be out of pocket. And if that lines up with the home that you could purchase out there on the market, then hey, who cares what the rate is?
Right? So I think one of the biggest things right now is like education. Like I've changed up a lot of my practices to try and inform a lot more people.
Yeah.
We used to be in this market that was like go, 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 where you were still informing them, but like rates were low. Obviously, people were paying a little bit more for homes.
There were
So
multiple offers on everything.
Yeah, and now we have to go about it in a whole different way that people haven't seen in, I don't know what, like 3 years, maybe even more. So there's a lot more education, I think, now that I have to tell my clients about or inform them on, and to make them comfortable in today's market and understand what's really going on, right? Like, again, if they're comfortable with that monthly mortgage payment, that the interest rate shouldn't necessarily matter, right? Again, with some of the opportunities that we have to refinance later on down the line, you know, if we can get you into a home that you would love at a lower price point, the interest rate might be a little bit higher, but if you can ride that out for, you know, a year, 2 years, and possibly refinance later on down the line, you're going to be much better off rather than paying 50, 100 grand over asking price, how that was, you know, during COVID, maybe even earlier this year.
Yeah, agreed. Definitely.
I feel like the other side of the education thing is like just looking back on the things that you learned when you got into real estate and you were like, oh my God, I had no idea. Like, I thought that buying a house, it was like, I need $200,000 cash just to get in the door. And it's not like that. It's actually very accessible if you know what you're doing or you have someone with you that can help you through the process. And I feel like, especially for Ryan, like I've sent over some people, I'm like, I don't know how this is going to work, but how about, and he was like, yeah, like we can figure something out. And I'm like, okay, great. But like at the end of the day, no matter what the interest rates are, you're going to be paying rent. You're going to be doing something.
Right.
Is that money going to be staying in a little piggy bank for you, or are you just kissing it goodbye? That's kind of what it is for me.
Exactly. Like you need to talk to a local professional. Right?
Well, that's the thing. Like going to these news outlets that always say like, oh, interest rates are so high, it's a terrible time to buy, blah, 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 right? Scaring off all these people.
Like, what's the alternative?
Right. And then their parents will start scaring them as well. Then their cousins start saying, like, hey, interest rates are terrible. Like, don't buy it, whatever. And it's like, okay, talk to someone who actually works in that industry, that field, 24/7, you know, is reputable in their local market, has some type of reputation, and see what route is best fit for you, you know? Just don't jump because interest rates are higher. You saw some headline, right? We have to dive deeper into, again, the education behind it and what we can do to best fit you. Have you seen, I guess, some of those changes in your world in terms of like education and like how we're dealing with today's objections or what's going on?
Yeah, definitely. Because if you look back over the last couple years, everybody wanted to buy a house. So there wasn't much that you had to say to get people excited or motivated or like show them why it made sense to buy a house, right? Because interest rates were around 3% and everybody was just like, yeah, it's time to buy a house because rates are low. So now at this point, like you said, there's a lot more hold handing. There's a lot more education that goes into it and just informing the buyer of where we are right now and how we're going to plan for the future so that the decision you make today doesn't put you in a worse situation 3 years, 5 years, 10 years, 20 years down the road, right?
It's kind of crazy how many people I still talk to today that's like, yeah, it's a complete seller's market and homes are going for $1 million over asking price. I'm like, wait a minute.
Wait, is
what?
that's not
Where did you see that at? Normally I'm having the other conversation like interest rates are incredibly high. But, you know, with the turn of the market, there being, I guess, I'd say the same amount of supply, maybe a little bit more than there was before, and a drop in buyers, you're going to have much more leverage in today's market. And again, like coming down to like closing costs and what your out of pocket would be, it's going to be much less than if you were to pay $50,000 over and have to cover all of your closing costs, because then you have no shot of really getting the home of your dreams, right?
And with the highest security deposit,
right?
This side or the other,
Right. It was super competitive, and now you have the ability to take your time in today's market, practically negotiate everything, whether it be repairs, whether it be your settlement date, whether it be I don't know, like and price even, right? Like
and price even, right? Like
the average days on market I think is much higher now than it was even a month ago.
I just
2
saw
months
the
ago.
report, but I didn't open it yet.
even a month ago.
I saw one that came out last
I saw
week.
one
I
that
forget
came
who it
out,
was from. It was like some Maryland Realtors
The
Association.
bright MLS inventory ones.
Maryland
I love
Realtors
them.
Association.
Love 'em.
I'm dead.
Love them.
Do you get reports like that on your end, Ryan?
Love them.
Not for like days on market. We can, of course, find the information.
Right.
Just look at any real estate agent's social media, right?
Literally.
So they repost that information.
Yeah.
But we don't get anything directly. More the information that we get is correlated to interest rates and our market.
You can't look at the MLS, right?
No.
Heard. Okay.
Hate to see it.
Yeah, we don't
I
have
know,
direct
right?
access to the MLS.
Ryan has FOMO right now.
He should. We could be sending each other properties right now.
I don't need the MLS too.
That's funny. When should you get pre-approved? I think it's case by case, really. If a lead comes in through, like, I don't know, it could come through online, Boomtown, Zillow, what have you. Sometimes they'll come to you with a lender, sometimes they won't. But if they don't, like, are they interested in 123 Main Street? If so, like, hey, you free this evening? Like, let's go out and see it. We get that face-to-face connection, get to chat a little bit more about their home search. Then we have, my main goal is to set a buyer consultation there. That way we can hop on Zoom, talk about their home search a little bit more in depth, and really see like what they're looking to spend, where they want to look, what types of homes they want to look for, and really break down. Geez, I need some water right here. The reason that they want to move and help them come up with the best game plan, right? And then when we start talking about finances, I'll have a certain idea, and then I'll send them to Ryan, just because you're going to talk to me about real estate. You're going to talk to Ryan about the lending side of things. But if they're like, yeah, I really want to see 123 Main Street. All right, let's get out there this evening. Right. And then if they don't really have any properties, they're kind of just started, maybe I try to have that initial buyer consultation off the start and get an idea of what they're looking for, set them up on the right path, and then introduce them to Ryan. One thing that I don't like doing is like overwhelming the client or the buyer, whoever it may be, with information right off the start, right? You can have that initial phone call. All right, let's have a buyer consultation. Or maybe you address a lot of different points on the phone, and then you're like, I'm going to also connect you to Ryan. I'm going to connect you to this person, that person, right? So it can be a lot of moving parts, and I want to kind of make that as stress-free as possible. So in terms of connecting to Ryan, I think it's a case-by-case basis, and you really just have to feel it out, There'll come a time, but it's just, are they interested in just jumping out there looking at property right now, and then we can talk about the details and everything else later on? Or when do you lock in your interest rate? Is it, right when you talk to Ryan Kurrle, when you throw in an offer, how do you lock in your interest rate? And I guess talk a little bit more on that.
Yeah. So typically you're going to lock in your interest rate once you're actually under contract on a home. So under contract, meaning you put in an offer, the seller's accepted your offer, and now you're going through to actually apply for the loan. You're getting an appraisal done, you're getting your home inspection done, working with the title company, doing everything you need to do to actually close on the property. At the beginning of that process, you'll have the option to lock in. Technically, don't have to lock in. Most people today are choosing to lock in their interest rate because we are in a rising interest rate environment, and they don't want to risk rates going up even more and that affecting their monthly payment, right? So the day you go under contract and that's signed, at that point, you can lock in your interest rate.
Okay. Now, you mentioned interest rates being in a rising market. Where are they projected to go? Do you guys have some sort of idea?
It depends on which entity you're looking at, I guess, right? So if you look back at the projections for this year, I mean, most places weren't saying that we'd be above 5.5%, 6%.
Really?
Right? And here we are sitting around 7%.
Yeah.
So the reason I bring that up is because you got to be careful when you look at projections, right? Nobody has a crystal ball. Nobody knows exactly what's going to happen in the future. It's fun to see what everyone else is saying, but you never know for sure, right? So the idea is that interest rates are going to keep climbing until the Fed really gets a hold on inflation and they stop raising interest rates, right? Or stop saying that they're going to continue to raise interest rates. So that could be middle of 2023, end of 2023, hard to say. I think that we are past the midpoint in the rising interest rates.
That's what I was going to mention.
Yeah, I think we are closer to the end than the beginning. Exactly when that'll end, it's hard to say. But yeah, I mean, most places aren't really saying that interest rates are going to be much higher than like 8%.
Yeah, because it seemed like we went on a rise pretty quickly here, and it's like, how much more are they going to rise in the next couple of months? Doesn't the Fed meet one more time? I think they're meeting in November, right?
Yeah.
I don't know what day, but could we see interest rates jump from like 7 to 9 or 10, or would it be more in like a smaller increment of like, maybe 8, maybe 7.5.
It would be a smaller increment. And pretty much when the Fed's going to raise interest rates at the next meeting, right?
Mm-hmm.
Most likely 0.75 of a point, 0.75%. Now, we already know that information. So since we know that information, the market knows that information. So that's already priced into mortgage rates where they are right now. Okay. So the interest rate increase that the Fed's going to do at the next meeting is already priced into the 7% interest rates that we're at the moment. Now, if the Fed comes out and says we're going to be more aggressive with raising interest rates in the future, we're going to increase next time probably by 1% instead of 0.75%. Now, that wasn't really what the market had planned originally. So then you would most likely see rates go up even more, right?
Right.
Okay.
So it's all about when the news breaks, that's when the market gets affected. So I wouldn't think that after the next Fed meeting, we'll see like a huge increase in interest rates. It definitely could keep subtly going up, but I don't see it jumping to like 8% just after the next Fed meeting because they went ahead and did what they planned, right?
Right. And I think, a good point that we kind of have, or some value that we provide, is we have these types of events here. Like we have our podcast where we sit down and talk with Ryan. We have our Wednesday trainings where we sit down and talk with Ryan. We're constantly in communication. And these people that see these headlines or certain things on the news, right? Like they don't understand about that 2-to-1 buy down program that you have, right? So like They're not seeing that. They're just seeing that 7% rate. Okay, well, guess what? You can be 2% lower, in today's market, and it'll gradually go up to where we're at now. And then you could refinance no penalty. And they're like, wait, what? I could have a 5% rate right now. Like, let's do that,
Right.
So I think, again, some of the value that we provide is just a lot of the communication, and then again, educating a lot of these people on the different programs and types of things that they have. Because at the end of the day, I think that's a lot of our job.
Yeah. I mean, it goes back to what you said earlier. Talk to a professional, get your information from there instead of from a news outlet.
Yeah.
Right. And I've used this analogy before with one of my clients. It's like, hey, if your real estate agent tells you like, hey, we should probably do this, or like your lender says, hey, let's try and do that, right? They're just looking out for your best interest. It's the same way as if your doctor was like, hey, we should probably do this surgery, you should have that tooth pulled, or you should do this, you should do that, you should take this medication, right? Hopefully it's, and again, your best priority to do that. They're not telling you something bad to lead you down some other route, I've had a friend that wanted to look at property, and I was like, hey man, like we should really get pre-approved and really take this much more serious, because I know you really want to become a homeowner, but in the market that we were in, going out touring homes and things were flying off the shelves left and right. So we found the right home. And he's like, oh, Christian, I want to throw in an offer. I was like, all right, well, you better, talk to a lender right now, talk to Ryan. And the next thing you know, the next morning that property was gone. Right. And I was telling them for, weeks, maybe even months, like, hey, you should get pre-approved. Like this is going to lead you to finding that right home. And when you find it, you're going to be able to pull the trigger. And, some people learn the hard way. I mean, and it sucks. But again, we're out here for your best interest and put you in the best position long term. I really liked your, was it the mission statement or the vision that you wrote earlier about being your part of like a family for long term? Do you know it off the top of your head?
No, but I can look at it. Hold on.
We're business planning right now for 2023, and I don't know. I was sitting there thinking about my vision, mission. Jesus, I can't speak. Vision, mission, and what was the other one? Values, yes. And like just sitting there for like 30 minutes, man, I couldn't like think of anything to write. And then talking to Heather, hers was so good and I loved it. And it comes down to kind of what we're talking about now, is like being a family and like pushing for the long term and helping you reach your real estate goals or your financial goals. You got it up?
I do. Okay. I'm committed to walking alongside you as a family member would, with care, attentiveness, trust, respect, and with your best long-term interest at heart.
That's so good, Heather.
Great.
Thank you. Don't But no, I feel like that's what it should be. I feel like this is such a big decision. Again, who you work with matters. And I feel like it goes so much beyond what actually happens, the education that you need to like make your decisions. And like you were probably sitting there and telling your client, like if we are in a multiple offer position and then we have a pre-approval from a local lender who has fantastic rates and it helps you out even more, like that gives you an edge, that gives you like competition. So why would you not do that? It's free. Like,
Right.
I don't know.
Christian,
But yeah.
as a listing agent, when you see an offer come in with Rocket Mortgage as the lender,
Ugh.
that's the face I wanted you to make.
That's amazing. I think every agent makes just like, oh god, it makes me
Yeah.
sick.
And then why is that? What does Ryan do better?
Well, so like for I think a couple things,
Did you
right?
hear
Like
about what happened the other day with one of our agents? It was day 45 of her closing with the Rocket Mortgage lender, and it all went to hell. Like they called her that morning on day 45 and we're like, yeah, no, we can't make this happen.
oh my god,
But dragged it out the entire time. Like that was like when they were supposed to close.
that's terrible.
That is so
I think a
Rocket
couple things that
Mortgage.
we do is like you're local and there's I think much more of an intimate relationship, whether it means like in person or even like you could drive to Ryan's office and like have a conversation with him. I've had a gentleman drop off documents to him and like meet Ryan. Like you can't drive all the way across. I mean, you could all the way across the United States and meet some person at Rocket Mortgage.
Yeah.
I don't know if it'd be the best experience, but like, you know, we provide so much more. Again, that relationship. We're local in the market. I've had lenders run numbers and they left off the taxes on a property and like completely screwed up the whole CD and Alta and everything else the day of settlement because he didn't know about like certain Baltimore City tax programs or things like that, right? That's where Ryan, in being in this local market, has an idea of all these things and kind of knows what's going to happen, how it's
Yeah.
going to happen, when it's going to happen, and we plan for all this. Like we know the market, we know how it operates. So I think it's just a great tool under your tool belt. Ryan, do you have anything else, I guess, to add on in terms of being a local lender versus some dude at Rocket
Yeah.
Mortgage?
We throw Rocket Mortgage under
I'm
the
actually-
bus a lot, but
Every-
I just mean like a lender that's not local.
Yeah. Any other?
1, 2, 3 lender.
Yeah.
This is more of like a funny parallel that I'm gonna draw, but
Let's
for
hear it.
any Office fans out there, I know there's a lot of them, so hopefully you guys get the reference. But when Jim and Dwight are trying to sell the guy on Dunder Mifflin, and that guy signed up for like a big box paper store, something like Staples, something along those lines.
Right.
And Dwight is sitting there and he dials, he asks what's the most important: customer service, communication, all the things that we ourselves pride ourselves on and think's very important. So he's sitting there and he's dialing the big box store that they're currently working with, and they're sitting on hold for the whole time that they're sitting there trying to sell them. And he's just like, oh, I can't do it. I just can't do it. And they're like, oh, instead, the most important thing is communication and customer service. You've been sitting on hold for 5 minutes trying to get through to your customer service rep. And then they call Dunder Mifflin on their cell phone, like dial it right there. And it's like, hi, Kelley, Dunder Mifflin, right? Like
Right.
picks up the phone as soon as it rings. And like, that's the difference, like we're going to be there for you. We're going to pick up the phone. Whereas if you're trying to get Rocket Mortgage on a Saturday or a Friday night when you're trying to get numbers around, you're trying to get an offer in. I mean, even a Tuesday morning, you might not be able to get them.
Well, I mean,
So-
time zones can even play into effect,
Yeah.
Yeah.
Like,
Yeah.
I don't know what time zone most of the Rocket Mortgage people are in, but like, I think they're at least,
It's all over.
oh, okay. I didn't know if they had one specific, like a lot of the
Like a
veteran,
flagship.
yeah, a lot of the other lenders like Veterans United, I know they're always a couple hours behind me. And when I need numbers ran or even on a like, I don't know, there's like, it's not as responsive as someone that's in your time zone, super local to the area, and the communication is like their number one priority. Is dialing a 1-800 number to reach your lender like good for you? Like, I don't know, especially on the
Yeah.
biggest purchase of like in your life.
Yeah.
Yeah.
Is it something that you want? And not to, again, shit on non-local lenders, but it's just, I think the experience is a lot and people don't take that into account for. And then later on in the transaction, they're like, oh, is this like what I signed up for. Like
Yeah.
I'm trying to call my lender, like he's not answering. I want these numbers ran. I had these questions and I can answer them to a certain extent, but that lender can go in much more detail and then he's not answering his phone. And then maybe their assistant's always picking up and you like, she can't answer the question either. And it's just like, you know, working with a local lender adds so much more value than people really realize.
And I mean, the whole, you know, push button, get mortgage thing, like it's not that simple. Right?
Yeah.
Like it'd be great if it was, but it's not because everyone's situation is different. So you just going online and typing in some numbers and then getting an estimate back with maybe talking to somebody for a few minutes. Like they didn't go through and explain every single charge on there. They didn't talk to you about the difference between conventional and FHA. They didn't show you your different mortgage insurance options, your different down payment options. They just said, hey, you're approved. Good luck. Right. Like that's not helpful for anybody. It goes back to what you were saying earlier about educating the borrower. You know, we got to hold their hand a little bit more right now. And Rocket Mortgage isn't changing their process at all with the market. Right. Yeah. They're doing the same thing.
Well, then, so let's talk about your 2-to-1 buy down that you have real quick. I know we mentioned it briefly for a couple minutes earlier, but some of these local lenders, or not local lenders, these non-local lenders don't have any of the programs that you necessarily offer, whether that be one's Maryland Mortgage Program, another one that we just talked about Wednesday was the 2-to-1 buy down, and even some of the other ones. What's the 2-to-1 buy down? What are some other programs that local lenders might offer around here in Maryland that people might not know of?
Yeah, so I'll start with the 2-to-1 buy down program. So that program is just some creative financing to get you into a home where initially your interest rate's going to be less than your final interest rate. So let's say rates today are at 7%. Your first year, you're going to be 2% below your interest rate. So you're going to pay 5% interest instead of 7%. That's where the 2 comes from, right? Okay. Second year, you're going to pay 1% lower. So you're going to go from 5% to 6% and then end at 7%, right? So 2-to-1, 2% less, 1% less. And then in the third year, you're going to pay your final interest rate, which is 7%, right? Okay. Of course, there is a cost to that. And the way that we structure it, we try and get the sellers to pay for it. So it wouldn't be coming out of your own pocket. And, you know, hopefully after those first 2 years, interest rates have decreased to a point where you can refinance.
I think that's a huge point.
Years, but yeah, that's going to be the plan.
The seller's paying for it. Yeah. And people are like, what? Yeah, the sellers are paying for you to have a 5% interest rate. And like you talk to any other non-local lender that's like not even heard of, like if rates are right now at 7 and a local lender is offering this program that sellers are paying for to bring you down to 5 for 1 year, 6 another year, and then hopefully, you know, rates end up dropping back, or even if they're staying the same, you're still in great condition. Even if they go up, you're in great condition, right? Like this is something that seems unbeatable, and that, excuse me, if you don't do your research, if you don't talk to the right people, you're not going to get in line with them. And I think a lot of people can be missing out. And I guess how much would it be? Like how much would sellers technically have to cover? I mean, it's probably a case by case basis.
Yeah, it's very case by case. It's going to depend on, you know, the home, how much your mortgage is going to be, how much you're putting down, what your interest rate is ultimately, because of course everyone's interest rate is different depending on program, credit score, down payment, all those different things. So hard to really answer that unless we had like a specific situation.
So if you want, talk to Ryan Kurrle at First Home Mortgage. He can get you in line with the program, and then talk to me or Heather if you want to buy, sell, or invest. Yeah. Right. Mic drop.
It's just one program, right? Like it's not going to work for everybody, but the fact that we're looking into these different things for you and not doing the whole just push button, get mortgage, hey, you're approved.
Right.
Looking at all your options and figuring out, hey, what's going to be the best for you and your family moving forward.
Yeah. Talking to a local market expert, man.
Yeah.
You know, that's what people need to do.
Yeah.
There's always creative financing out there.
Absolutely. Google is your friend for a lot of things. Finding the right lender, I don't know. You need to talk to an agent in your local market, and then they'll put you in touch with the right people. Yeah.
Agreed.
Yeah. Ryan, how can they find you on social media, Instagram, email, whatever?
So we have all of that. So
Well, yeah, like how can they find you?
right. So the Kurrle team, Instagram's probably gonna be the best. We
Okay.
post there most often.
Mhm.
So maybe you guys can tag our Instagram and Facebook page. That way people can follow.
We got you.
Is that something that we can do?
Yes, sir.
Perfect. Let's do that and then give us a follow. Let's get those follows up.
Smash that like button.
I'm dead, Curly. You missed it. Michael was getting real weird on the podcast about 2 weeks ago.
I can't imagine that.
It's unheard of, right? Heather, how can they find you?
Instagram, TikTok, everything like that. It's Heather Kelley 230.
Awesome.
Yeah.
And then you can find me on Instagram, Christian the Deadhead, or TikTok, the Deadhead Realtor. You can email me, christian@frankoliverco.com. I appreciate you guys listening to the podcast. It's Two Baltimorons with Ryan Kurrle, Heather Kelley. Thank you so much, and we'll catch you later.
Just so you guys know, if anyone can guess exactly how much Christian Olson spent on the Deadhead tickets, I will Venmo you $50.
And we're out.
Scene.